Good morning, distinguished guests, ladies and gentlemen. On behalf of Rice University's Baker Institute for Public Policy, it is my pleasure to welcome you to this program, the first day of our fifth annual Baker Botts Energy Conference titled Electrification and Decarbonization, Pathways to a New Energy Future. While I wish that we were able to fully gather in person in Baker Hall, we are glad to be able to hold this important conference in a hybrid mode. This conference takes place at a time of unprecedented challenges, both nationally and globally: climate change and environmental issues, the COVID-19 pandemic, a new US administration, the emerging role of China, managing transatlantic relations, migration, and socioeconomic injustice nationally and globally. So despite the challenges of COVID-19, our Baker Institute centers and programs have continued their data-driven work and have widened their audiences. This is certainly true of our flagship Center for Energy Studies led by Dr. Ken Medlock. The Center for Energy Studies draws on our comparative advantage of being based in the energy capital of the world. In 2020, the CES was once again ranked as the top energy and resource-based think tank in the world and was recognized in a special category called the Center of Excellence for being ranked number one for 3 consecutive years, a distinction for which we are justly proud. Since the Baker Institute transitioned to primarily remote operations in March of 2020, the CES has held timely and incisive webinars each week on the most pressing energy-related topics. They have truly, in my eyes, risen to the occasion during these unorthodox and extraordinary times in an outstanding manner. We are also honored to partner with Baker Botts for this event. Our ties with Baker Botts are close through both our honorary chair, Secretary James A. Baker III, and his grandfather, Captain Baker, who was instrumental in founding Rice University. Baker Botts is a world premier energy law firm and is very well placed to speak to global developments in the energy industry. I would like to thank Baker Botts for their longstanding relationship with and support of our Baker Institute. So on that note, please join me in welcoming John Martin, the managing partner of Baker Botts. John?
Secretary Baker, Ambassador Djerejian, Ken Medlock, Keisuke Sadamori, distinguished speakers and guests, good morning, good evening, good afternoon, wherever you may be, whether here in Houston or online, and welcome to the 5th Annual Energy Summit. Appropriately, the theme of this year's summit is electrification and decarbonization, pathways to a new energy future. Baker Botts is proud to be the premier law firm partner of the Baker Institute's Center for Energy Studies, and we appreciate the opportunity to jointly develop and host this innovative conference. As many of you know, members of Secretary Baker's family were among the founders of our law firm almost 2 centuries ago. And our commitment to the Baker Institute is a reflection not only of our shared history with Secretary Baker and Rice University, which happens to be the firm's oldest client, but also of our respect for the world-class research and thought leadership the Baker Institute provides on energy and other public policy issues. This year's conference will address the rapid changes occurring in the energy industry as the drive toward carbonization and electrification pushes companies across the entire sector to adapt to these new priorities. And I would specifically like to thank 4 of my partners from Baker Botts who have served as this year's program co-chairs. George Fibby, a partner in our energy litigation practice, Tom Holmberg and Julie Mayo, partners in our global projects department, and corporate partner Natasha Khan. We continue to find ourselves in a period of unprecedented change in the global energy sector, which is why this event is so important this year. As the leading international energy law firm, Baker Botts itself is caught up in these momentous changes. And we are actively working arm in arm with our clients, including many in attendance here in Houston or online, to manage risk and capitalize on opportunities in this rapidly changing environment. The two key macroeconomic trends we are seeing in the energy sector include exponentially increased efforts to innovate across the energy value chain in order to reduce emissions in existing energy production and to develop lower carbon energy solutions and energy technology to meet growing energy needs. And the second key macroeconomic trend is, of course, the strong and growing focus on ESG, with public and private stakeholders pushing for sustainable energy solutions and environmental stewardship, combined with heightened expectations around governance, diversity, and social impact. At Baker Botts, we embrace an all-in approach to energy that serves clients in both the oil and gas industry and the renewable and conventional power sectors. We have industry-leading expertise in wind and solar power, battery storage, power generation and distribution, as well as retail power, lower carbon fuels like renewable natural gas, biofuels, and green and blue hydrogen that support energy transitions, carbon offsets and trading, LNG, including lower carbon and carbon neutral LNG, carbon capture utilization and storage, and energy technology. We will continue to support our clients with a multidisciplinary, full-service approach to serving their needs. Needless to say, we are proud to be recognized as the go-to firm in the energy industry. In Chambers and Legal 500, we continue to increase our rankings even further across the energy spectrum. Our lawyers are consistently ranked in the top of the legal field, and for the second straight year, Law 360 named us Energy Practice Group of the Year. A few of our recent transactional highlights that you've read about include ConocoPhillips and its $9 billion acquisition of Shell's Delaware Basin position, CenterPoint in Energy Transfer's $7 billion acquisition of Enable Midstream Partners, Cabot Oil and Gas in its $17 billion merger with Cimarex, Energy in the offering of the first ever sustainability-linked bond to be issued in North America, AES in the first of its kind 10-year agreement to supply carbon-free energy for Google data centers, and Sonova in its acquisition of SunStreet. And on the litigation side, we recently secured a win for Dril-Quip in a 4-week in-person trade secrets jury trial here in Houston in the middle of the pandemic. And we are advising many clients on legal issues arising from Winter Storm Uri, including with respect to government investigations, regulatory proceedings, and litigation matters. Our recent energy litigation success has been so impressive that we were named Texas Litigation Department of the Year by the American Lawyer for the second year in a row. We are proud of our long and successful history in the energy arena and our collaboration with the Baker Institute in this program. We have an incredible lineup of speakers and panelists for the summit. Today, Keisuke Sadamori, Director of Energy Markets and Security at the International Energy Agency, will provide the opening remarks. My partner, Jason Bennett, will then moderate the panel discussion on decarbonization and circularity. And my partner, George Fibby, will lead a panel discussion on electrification and sustainability. We are delighted to be co-hosting this event with the Baker Institute and look forward to our continued collaboration with them and with our clients for many years to come. Thank you. I hope you enjoy this conference. And now I'd like to hand this over to Ken Medlock.
So first of all, it's great to see faces in the Dore Commons in the Baker Institute. This is our second event. We actually hosted the Vice President of Guyana in an interesting discussion with Francisco Minaldi on what's going on in Guyana and how they're actually trying to achieve sustainable development as they advance the exploration and development of resources offshore. So it's phenomenal to see people here again. And for those of you who are online, it won't be too much longer before we'll all be able to crowd in here in sort of close quarters and sort of do things the way they used to be done, and I look forward to that. Thank you also to Ambassador Djerejian for his excellent remarks to open up and for the kind words he said about the efforts of the Center for Energy Studies and the Baker Institute as a whole. I can tell you that as a team, we have had, it's been rough, but it's been good. We've been able to think outside the box and do things in creative ways to continue to communicate about the most important issues of the day, and that's been phenomenal. So congratulations to my team. Everybody's just done a really, really good job. And John, thank you again for all your support of the Center for Energy Studies and the Baker Institute and all of your team. You have a great team. I love working with them. So much so that Stephen Miles is now part of my team. So it's been great and definitely look forward to continued collaborations. John sort of gave a highlight of today's discussions, but I'll kind of continue that vein because tomorrow we're going to have some very interesting presentations and conversations around ESG and energy investment, what that actually means, what it looks like. How do you define ESG metrics and how that translates into actionable investment guidance? It's a bit of a black box still. Not everybody's in agreement, but it's an important area that is obviously growing on the minds of individuals in boardrooms all over the world. So it should be a really interesting conversation. Then we'll have a discussion right after that on the future of oil and gas as energy transitions, and we'll migrate from there into what I think is going to be a really interesting armchair conversation with the Nature Conservancy on the role of nature in the portfolio of addressing climate change. And that's really a key point that I think will come out of all of the discussions we have over the next 2 days. It really is about a portfolio. It really is about trying to identify all the different levers that can be pulled so that you can actually achieve stated goals. It's sort of Econ 101. You don't put all your eggs in one basket, right? So the same idea in terms of diversifying the risk of achieving a particular goal, you got to think about things from a portfolio perspective, and nature certainly plays a role there. And then, of course, we'll wrap up with a really interesting panel discussion on views from around the world and the road to Glasgow. The design of that panel is something that kind of grew out of the experience here at the Baker Institute over the last decade, where we've hosted on average 23 different delegations and some years up to 30 of individuals from everywhere around the world. They all want to talk about the same things, but the perspectives on the issues when we get into those conversations are different in every single case. And I think that's a really important point that needs to be elevated more in the conversation around how you address climate. And so that panel is going to hit that head on. We're going to hear perspectives around dealing with climate and the road to Glasgow that are definitely international, and I think you'll see some differences and some similarities. And I think that's a really important aspect of any international collaborative action that could take shape as we approach Glasgow and beyond, quite frankly. And then, of course, Secretary Baker will wrap things up for us. He's always entertaining, incredibly wise, rich with experience. Should be a great discussion. I never know what he's going to say. He doesn't share his remarks with us, but I rest assured it's going to be great. So I'm looking forward to the entire summit unfolding, and hopefully all of you will glean as much from it as I think you will. So with that, what I want to do is actually turn the floor over to Keisuke Sadamori. He's the Director of Energy Markets and Security. I'm not going to read his bio. Y'all can do that. It's actually in the program. The one thing I will say, though, is he has a wealth of experience at the highest levels of government in Japan, having worked in METI and other organizations. So he brings a very interesting lens to the entire subject of energy security and how energy markets intersect with energy security. And I think you'll hear that somewhat in his remarks, as well as how he's actually taken on the role that he has currently at IEA. And so, Keisuke, I will hand it over to you. The floor is yours.
Thank you, Ken. Good morning to you all. First, I would like to thank the organizer, the Baker Institute, for this opportunity. And today, I would like to introduce the Net Zero by 2050 roadmap released by IEA in May, and then talk about what is happening in the energy market at this moment and its energy security implications. Next, please. So this is from the World Energy Outlook 2020, last year's version. The energy consumption and resulting CO2 emissions declined drastically in 2020, due, of course, to the lower mobility and the lower economic activities caused by the COVID-19 pandemic. While COVID-19 is still with us, and we see some waves of pandemic in some regions of the world in 2021, energy demand is recovering in a solid manner. The stated policy scenario, the steps, the line at the top of the World Energy Outlook shows where the current policy ambitions by the government would lead the world. Emissions would decline, but would stay far above the level needed for staying on the Sustainable Development Scenario path, SDS of WEO, which is consistent with the path to achieve the net zero emissions by 2070. But many leaders of countries around the world now have declared pledges to net zero by 2050, which is much more ambitious target than the SDS. And IEA, as the global energy authority, try to translate these net zero pledges into what they would actually mean in terms of the energy markets and the energy technologies, and produce the net zero by 2050 roadmap. And this roadmap is, according to our executive director, Dr. Fatih Birol, it is narrow but achievable. So let us look at some elements there. Next, please. The Net Zero by 2050 roadmap calls for an immediate and massive deployment of all existing clean and efficient energy technologies. So we cannot continue the business as usual for a while and then try to reduce the emissions in the very final years before 2050. So serious efforts must start immediately. The energy efficiency and variable renewables, wind and solar PV, must play a leading role in emission reductions to achieve the target by 2030. So wind and solar deployment must expand at an enormous scale, quadrupling annual additions to more than 1 terawatt, 1,000 gigawatt by 2030. And these generation sources have already become the least expensive options in most countries, and therefore the major challenges lie in secure integration into the power systems and also the local acceptance issues. Energy efficiency, they need to grow need to improve at a rapid rate, 4% per year. And this rate is much more than the recent achievements. The global energy intensity is expected to improve 1.3% this year. And this rate is similar to the average rate achieved over the last 2 decades. So 4% means 3 times of the recent rate of improvements. So this is a very challenging target, but efficiency first should continue to be the key principle. So prioritizing energy efficiency is not only crucial for emission reductions in the near future, but also for ensuring the energy security. Doing more with less is always a secure, no regret option. And this is not limited to the short term. As a later slide shows, net zero by 2050 requires substantial contributions from new technologies still in the development stages. So efficiency will continue to be important to hedge against such technological risks. Next, please. The clean energy transitions need massive amount of investments, and that will be more than triple of the current level. Can you click one more time? Yes, so that'll be a grow to kind of three times, triple of the current level. The once again, please. In renewables, the energy efficiency and infrastructures. So those are the investments are needed. So policies need to be designed to send market signals that unlock new business models and mobilize private savings, private spending, especially in the emerging economies. The accelerated delivery of the international public finance will be critical to energy transitions, especially in developing economies. But ultimately, the private sector will need to finance most of the extra investment required. Next, please. I wonder if the screen can be, yes, this one. Thank you. So net zero, the net zero emission roadmap highlights the role of new technologies and innovation. And indeed, the half of needed emission reduction must come from technologies that are still in the lab or the prototype stage. So this means that the high level of uncertainty and risks in technological availability and also depending on the policy supports. Diverse clean energy technologies must be pursued, and we have no luxury for being selective. And diversity is the source of security in itself. In the electricity sector, the dispatchable renewable technologies like the hydropower, bioenergy, geothermal, and others are critically important. Nuclear, the both existing light water reactors, and also the new technologies like the small modular reactors, SMRs, are important for countries that have chosen to use nuclear. CCUS, as an enabler of clean energy security, must be accelerated in both the power generation sector and also hard to abate industry sectors. The low carbon fuels like the hydrogen, the ammonia, and other synthetic fuels should be accelerated further. The demand side resources and batteries also significantly contribute to the power system flexibility and the electricity security. Next, please. So there are many milestones in this roadmap, 400 in total, the vast majority on the demand side. One of the milestones is that actually that's on the left corner. One of them is that there is no need for the investment in new fossil fuel supply in this net zero pathway. And it is often reported by the media that the IEA suggests that the investments in new oil and gas projects should not be done. And this is not correct. What the roadmap says is that if oil and gas demand were to go down as required in the net zero emission pathway, approvals of a new oil and gas development would not be necessary. So if demand for oil and gas do not go down, while industries hesitate to take on new projects due to concerns over the stranded assets, oil and gas market could go through a new round of volatility. There are other the very ambitious and challenging milestones like like highlighted the below on the down part, like the 850 gigawatt of electrolyzers for green hydrogen production as early as 2030. So the next, please. Yes, thank you. The fossil fuel use will decline as clean energy transitions progress, but this does not mean that the traditional energy security concerns do not matter any longer, just as I said on the previous slide. So here's the forecast for 2021 and 22 in the most recent oil market report. Recovery in jet fuel demand is lagging behind due to the slow recovery in international travel. We still see new waves of pandemic and cannot be sure when the world can return to full normal. But overall, global oil market is continuing recovery and expected to return to the pre-pandemic the level in the final quarter of 2022. And we are now looking at the substantial, quite rapid stock draws now at this moment, and it is expected to continue until the end of this year, which is supporting the high prices, high crude prices. Next, please. About the natural gas, yes, so the steep rise in European gas prices, this has been driven by a combination of a strong recovery in demand and tighter than expected supply, as well as several weather-related factors. And these include the cold and long heating season in Europe last winter and lower than usual availability of wind energy in recent weeks. The European prices, they also reflect the broader global gas market dynamics. So there were strong cold spells, first in East Asia and then North America, as in Texas, in the first quarter of 2021. And they were followed by heat waves in Asia and drought in various regions, including Brazil. All of these developments added to the upward trend in gas demand. So in Asia, the gas demand has remained strong throughout the year, primarily driven by China, but also by Japan and Korea. On the supply side, LNG, liquefied natural gas production worldwide, has been lower than expected due to a series of unplanned outages and delays across the globe and delayed maintenance from 2020. European electricity prices have climbed to their highest levels in over a decade in recent weeks, rising above 100 euros per megawatt hour in many markets. In Germany and Spain, for instance, the prices in September have been around 3 or 4 times the averages seen in 2019 and 20. This increase has been driven by surge in gas, coal, and carbon prices in Europe. The strong rise in gas prices led electricity providers in a number of European markets to switch from gas to coal for power generation. Next, please. And actually, next is on coal. And the coal is not declining either, at least not yet. So after declining by 4% in 2020, the global coal consumption showed robust recovery with over 10% growth estimated in the first half of this year, 2021. China was responsible for about half of the global increase. In percentage terms, growth in the United States, about 30%, and the European Union, over 15%, was higher than China, which was 11% in this period, during this period, first half of this year. But coal consumption declined in the United States by about 30% and by 35% in the previous 2 years. So even after this year's rebound, coal consumption in these 2 regions in 2021 will not reach the level of 2019. By contrast, coal consumption in China has been steadily growing since the drop in 2014 to 2015. And this continued to increase even in 2020 and is currently at historical highs. So despite leading the world, China leading the world in wind, solar, and the nuclear capacity additions, strong growth in the economy and industrial output, coupled with demanding weather conditions, and that's a cold snap in winter and a hot summer, has pushed the electricity consumption up, and so the coal-fired power generation level. Coal prices have also rebounded to the level not seen for more than a decade. So the next, please, which is actually the final one. So ladies and gentlemen, so clean energy transition is happening and must happen faster. The government must take stronger measures to accelerate the transition to net zero. But the demand for fossil fuels, natural gas in particular, will not go down so easily. And natural gas plays an important role to replace more carbon-intensive fuels such as coal and in some cases, oil. So the links between the electricity and gas market are not going to go away anytime soon. And gas remains an important tool for balancing electricity markets in many regions today. As clean energy transitions advance on a path towards the net zero emissions, our global gas demand will start to decline, but it will remain an important component of electricity security. What is happening in European gas and the electricity market is a reminder of the importance of secure and affordable energy supplies, particularly for the most vulnerable people in our societies. So well-managed clean energy transitions are a solution. They should be a solution, not the cause of a market volatility. Thank you for your attention.
Thank you, Keisuke. So for those of you who are actually present, there should be little cards. You can write questions if you have them, and we will collect them and bring them up to me. That's done in lieu of passing a microphone around, which is really related to health and safety protocols here at Rice. I will remind you as well that if you're seated at your table, be sure you leave your mask on, just because you never know when somebody's going to walk in and come up to you and say your mask needs to be on. That's also health and safety protocols at Rice, so please leave it on if you're seated at your table. All right, so Keisuke, thank you very much for your presentation. I actually do have a couple of questions while we wait for questions from the audience. The first one is really related to something you leaned into at the very end of your presentation, where you walked through the some 400 milestones of the net zero by 2050 scenario. That's a large number, to say the least, and I think it highlights the difficulty or the challenges in front of us if we were to achieve that particular scenario. But then you, and I'll come back to that in a minute, but then you also reference what's going on in the current market. Excuse me. And you talked a little bit about coal growth in China and in India, both large developing nations. You talked about the tightness in LNG markets. You talked about what's going on in crude oil markets and just overall with hydrocarbon demand. And I have a very specific question that I think you can lean in on in a little different way than most folks could because of your background, thinking about security of supply in particular. When you look at currently what's going on in China with the electricity crisis and a move by the government to use demand as a resource and ask for some industrial cutbacks, what do you think the future is likely to hold when you put an energy security lens on China for the demand for coal and natural gas in particular as a fuel for electricity?
Well, that's a pretty difficult question. First of all, I think I would like to point to the case of China, which is a bit different from the other countries, because, well, I understand that in the very case of China, I understand that the kind of command and control from the central government of Beijing, that is affecting the kind of a local prefectural the governments are trying to lower the level of consumption, which is kind of the turning out to be a strong pressure to the electricity supply, and also we are seeing the kind of the high coal prices, and so for the power generators, it doesn't make the kind of a very strong economic sense to continue producing electricity under the current situation. So I think that that is partly coming from the kind of a different the market and the energy systems. That is unique to China. So that's, of course, we need to examine what is happening in China in detail, but that is a bit different the case from the high energy prices as we see in Europe at this moment. Going forward, I think that when we put forward the clean energy transitions, the policymakers also need to be aware that they need to pay very strong attention to ensuring the secure and stable energy supply. Because if there's any serious blackouts or the energy supply disruptions that can be alleged to be caused by the clean energy transitions, then that would make the the advancement of clean energy transitions rather difficult. So I think that the energy security the mattered in the world of fossil fuel supply, but also that would continue to be crucial in promoting the clean energy transitions and the decarbonization of the energy systems.
Yeah, so you're really referring to, and you referred to this in your remarks, about striking a balance between energy security and low-cost energy supplies and reliability, to say the least. And reliability has been an issue that has come up quite often, both very locally here in Texas, just in the last 9 months, but also you're seeing it, I mentioned it in China, but you're seeing it in Europe right now. And it begs a really interesting question about the future of the energy mix and some of the goals and milestones that have been laid out. And I know IEA has done some work on this, and it really gets to the heart of the question I'm about to ask you gets to another issue that several in the audience here have asked via the question cards they put forward, related to how do you pay for the pace and scale of the transition that you laid out. Because, as you indicated in one of your slides, the amount of investment that needs to occur in wind and solar in particular, I think has to increase to over $4 trillion a year by 2030 to meet the goals that are stipulated. And that really begs the question, A, where does that money come from? And B, how does that balance against maintaining other sources of energy supply that are critical for maintaining reliability?
Yes. So as we move toward the decarbonized energy systems, electricity systems in particular, that would call for new investment. And these investment would require the heavy amount of investment at the outset. And this can be covered, repaid by the lower fuel costs in operation. So this does not mean that the low carbon energy systems are more expensive than the fossil fuel systems. But it is true that these decarbonized systems would require large amount of investment at the beginning. And so the whole question is whether we can design a system to incentivize the private sector's investors to spend money with the confidence that those money can be repaid by operating those the low carbon asset sources. So this would require a predictable, transparent, a regulatory environment, and also some systems to assure investors that they can have some confidence in the pouring money to these systems. So and as you point out, that this would be a a very large amount of money. But if this can be done successfully, then this will lead to the solid investments, which will lead to the higher GDP growth, as shown in the slide.
Okay, that's interesting. I mean, and I think we agree that that's certainly a challenge, because you've layered in not only the immense capital requirements to facilitate transition, but a whole host of issues with regard to legal and regulatory environments that can help facilitate that capital flow and a return on investment. So, as you correctly pointed out, it's not impossible, but there's a lot of things that have to happen in order to meet the stated goals by the particular date that we have in mind. And one question that has come in, which is I think very interesting, and it links to something that we're doing a lot of work on, I know IEA is doing a lot of work on, is and you referenced this in the slides, but you didn't really dive into it a little bit, so maybe you could here. But what role do low-carbon hydrogen sources play in facilitating a transition to a low-carbon future?
About the hydrogen, we have been working for the various G20 processes every year. And in 2019, Japan was the kind of chair country of the G20. And we were asked, actually, Fatih met with the then Prime Minister Abe, and he was asked to produce a comprehensive report on the hydrogen. And that's why we produced the Future of Hydrogen report. So in this report, we point to the crucial role of hydrogen. And of course, we need to bear in mind that there are some, what's the right word? False starts. I mean, the expectation and disappointment to the hydrogen in the past 20 or 30 years. But we consider that this time it could be real. And that is because the hydrogen can supplement the kind of a variability of low-cost renewable like wind and solar, and also the hydrogen would be crucial to fight against the emissions, to lower the emission from the hard to abate sectors like the long-distance transport, and also the industrial sectors that requires the high-intensive heat. So the hydrogen can work to decarbonize the sectors that is difficult to electrify. So in that respect, we expect that the hydrogen can play a very important role, but in order for that, we need to see the kind of substantial reduction of low carbon hydrogen, both blue hydrogen with the CCS and also the green hydrogen to be produced from the low carbon electricity through the electrolyzers.
Okay, and this actually brings up it leans into another question that kind of follows on from hydrogen. You indicated in the net zero scenario in particular that there's almost half of the reductions will have to come from technologies that are still in the lab or on the drawing board, and that's a remarkable statement given the historical pace at which new technologies develop and matriculate out into the market. So I wonder if you could talk about that a little bit in particular, with regard to how do we accelerate the pace of change, the pace of adoption of new technologies without arbitrarily picking winners, which is what oftentimes policy tends to want to do. And what sorts of technologies does IEA have their eye on with regard to facilitating such a rapid transition?
Well, this will be a kind of the challenging path, and that's why the IEA's executive director called this path to be narrow, but still achievable. First of all, this chart, the showing that the half of the emission reductions need to come from kind of the technology still in the development stages. This shows the kind of enormous amount of technological challenges in achieving this path. And so first of all, the only letting industries to develop does not work. So public R&D investment need to happen at a massive scale. And this is a kind of the necessary conditions for that. But also, I think that you pointed to the very important the part of this discussion in your question, which is that we should not try to pick winners too much. And so I think that ideally we should try to introduce the market systems, incentives, which is basically technology neutral. So in that respect, the measures like the carbon pricing would be a very important part of incentivizing the kind of low carbon innovation and also the adoption, commercialization of those technologies, because that would be crucial for letting private sectors to invest in the kind of promising areas. And they're important part of the kind of new technologies areas. But for instance, the advanced batteries, because energy storage is a very important part of the kind of low carbon transitions. We are already seeing the very low cost, variable, intermittent energy sources. So the whole question is about how we can store it. So the advanced batteries or the other types of the energy storage technologies would be no doubt very important part. And also the hydrogen is also is included in that type of category of technologies. And also the areas like the direct air captures, which is very expensive at this moment, but that would play a very important role in terms of reducing the CO2 from the atmosphere. And in the area of nuclear, the small modular reactors, the new types of the nuclear technologies, those are also the very important part. And also, it's not only the kind of technologies per se, but also the behavioral changes of people. That would also play a very important part in this the low carbon transition.
So you mentioned two things that I've gotten questions from our audience that I want to ask you about. So the first one is with regard to nuclear. A lot of times when we get into conversations about net zero scenarios and how we achieve certain goals, nuclear is in many countries and in many conversations, quite frankly, left out of the discussion, which is remarkable given that it is a zero carbon source of energy. It carries other baggage, so to speak, particularly in the public eye. So how are things progressing with regard to conversations internationally on nuclear, and where do you see the most opportunity for gain there if we are to actually achieve low carbon futures with nuclear as a base?
We consider that the nuclear should play a very important role in reducing the emissions, because at this moment, nuclear is the second largest the low carbon electricity source, only after hydropower. And if we focus only on the advanced economies, nuclear is still the largest source of low carbon electricity, and it is dispatchable. This is a very important part. So that's why we came up with the new the nuclear report in 2019, and we consider that that would be very important for countries to reduce emissions going forward. But what we are seeing right now is the aging of our nuclear power fleet in advanced economies, and so if we do not take any kind of the additional policy actions and let those older nuclears the phase away, then we expect that the nuclear capacity in advanced economies, Europe, United States, North America, and Japan would go down to around 1/4 of the current level by 2040, which would be a huge loss, and it will be very difficult and expensive to replace all of them with some collection of other low carbon technologies like the wind and solar, for instance. So we consider that the nuclear should play a very important role, but unfortunately that is not happening in the advanced economies. While if we take a look at the global picture, the China, Russia, and probably India would be the one to increase the capacities of nuclear going forward. So that's the picture. That's how we see the picture at this moment. And also, in order for the kind of the continued contribution from the nuclear, the kind of new builds of the existing light water reactors, but also the new types of nuclears like the SMRs. We hope that the development goes well, and including the cost reductions, so that they can contribute to the kind of low carbon society. As the SMRs, that would fit better to the electricity systems with more variable renewables like wind and solar, because they can be operated more flexibly than the large-scale light water reactors.
Great, thank you. So the other part of, the other thing you leaned into a little bit that was raised by a couple of questions I received from the audience now pertains to consumer behavior. And this really gets into a discussion about demand as a resource. How important going forward is, or will efforts be to really making the general public, large industrials, aware or more aware of their energy use and the implications of their energy use in terms of not just meeting net zero goals, but also providing energy in a more sustainable and reliable way?
We believe that the energy efficiency is the first fuel. And we recently produced a report for the G20 on the issue of security of clean energy transitions. And you can find it on our website. And I would like to point to that report because it puts efficiency first as the first principle of energy security. So we think that as I said, the efficiency first applies not only for the emission reductions, but also for ensuring the security, because the best best and safest power plants on Earth is those that are not built. And so efficiency is very important, and human behaviors they would need to change in order to, because there are much more that can be done with kind of the behavioral changes, and that's also covered in various reports of the IEA. But at the same time, we cannot only depend upon kind of a people's will. So in order for the demand side to really contribute to the kind of secure and affordable energy systems, the behavioral changes must be supported by various automated systems driven by the IT, the information technologies, because the biggest hurdle for the behavioral changes or the energy efficiency are the kind of transaction costs. So even if people know that those behavioral changes are good for the environment and reduce energy consumption, they won't do that if it is complicated or burdensome. So the kind of automated systems with the information technologies, that would be very important for achieving the benefit on the demand side.
Okay, that's interesting because we've already seen some evidence of that. Like, for example, when you walk out of your office, the light goes off if there's no movement for more than 10 seconds, right? That sort of thing. Those are the kinds of things I think you're referring to, and definitely they do play a benefit. But you referenced something with regard to the report that was generated for the G20, which I'm aware of, but I'm not sure most of the folks in the audience are, because I've actually received some questions, and I wonder if you could lean into this a little bit. But specifically, the work that IEA is doing with its member nations with regard to energy security and energy transitions. Could you elaborate a little bit on that for the benefit of our audience?
It's quite diverse, but first of all, I think that I would like to point to the fact that even if the clean energy transitions happens and we are seeing more the wind and solar in the electricity systems, a kind of a traditional the energy security on oil, the kind of a stable supply of oil, natural gas, they continue to be important for the IEA, and that's something that we are already seeing in the European continent as well. And in addition to this traditional types of the fossil fuel kind of a supply security, we are now working more on the electricity security because the electricity market is changing with the higher share of variable renewables, and therefore we need more flexibility in the electricity systems. And according to our projections, the demand, the requirement for the flexibility will grow faster than the demand, the entire electricity demand growth. But the current electricity market systems is not is not well fit for incentivizing that sort of the investment needed for the power system flexibility, and also the ensuring the generation capacity adequacy. So I think that this continues to be a very important the kind of the problems, issues with the in the energy security, in particular the electricity security. So that's why we think that we need to work hard on that matter. And also with the recent developments, I think I would like to also point to the importance of making best use of existing assets. So for the electricity security is also the one part of that picture. So we need to kind of make kind of good, wise use of existing dispatchable thermal power plant capacity for ensuring the electricity security. Even though we are seeing the even though we are seeing the kind of wind and solar on one hand. So I think that's a very important element. And also, for instance, the low carbon gas, like the biomethane or the hydrogen derived gases or the hydrogen itself. Those are important elements in the electricity systems, and they would also be important for somewhat future proofing of existing natural gas assets like the pipelines, so that we can continue to make very good, wise use of the kind of existing infrastructure for the future kind of transition to the low carbon systems. And I think that's also a very important part of the energy security discussions going forward.
That's very interesting. We're running up against it on time, but you made a couple of statements that I find very appealing because I've actually made them in the past, so I always like it when people say the same thing. One was the role of energy efficiency. You know, I often talk with my students when we're talking about the demand for energy, that efficiency is a virtual source of supply because it allows you to do more with less. So I think prioritizing that is critical for achieving the goals that have been stated by global leaders and by firms all over the world. But you also leaned in a little bit on the use of existing infrastructure, so legacy assets. And this speaks very closely to something that people have been writing about for decades, referred to as the valley of death for new technologies, and you can apply that to energy specifically. Things that tend to be successful are things that can leverage existing assets because there's a lower fixed cost of deployment. And so when you start to think about all of that and achieving low carbon goals, I think you can get to a point where there are some options that are very palatable and actually quite affordable. So it's interesting to hear you talk about that. So I think everybody here is definitely looking forward to seeing more of what IEA is doing on this front with regard to energy security, energy transitions, and how the world is changing as it always has and always will. But Keisuke, thank you so much for joining us today. Really appreciate your remarks and your insights, and look forward to catching up in person sometime sooner rather than later. Thank you.
Ken, thank you so much for including the IEA in this excellent event. Thank you very much.
Thank you.